In today's video, I'm going to take a look at where I think we are heading in 2018 for the stock market, the metals market, energy, and the currency, specifically the dollar. To start off with the stock market, you can see throughout 2017, the market was in a pretty consistent channel, just kind of staying an equal distance above this 50-week moving average. We didn't really get any big moves to the upside. We didn't stretch the rubber band, so to speak, too far to the upside at any point last year. So consequently, we haven't had any extreme moves back down, say all the way back down to this 50-week moving average. And as of last week, it's starting to look like we may have put in an intermediate top here, but the daily cycle is going to be on day 31 come Tuesday, so we don't have a lot of days left in this daily cycle to generate a big scary move down into the intermediate cycle low. So I'm not really anticipating anything more extreme than maybe something similar to what we had here in August, maybe a 3 to 5% correction. And then I think this trend that's been in place, I think, is going to continue next year. If the trend just maintains this steady channel higher, then by July we're probably going to be somewhere around 8,000, somewhere between 8,000 and 9,000 on the Nasdaq. However, I'm of the opinion that we've started a bubble phase in the stock market, and I think we're probably this steady uptrend is probably going to start to morph into a more parabolic type structure as we move into 2018. So if we just maintain this trajectory, maybe the chart probably begins to look something like this by July, and the Nasdaq is maybe somewhere around 8,000. However, that's not really my expectation. I think all the years of QE are now going to flood back into the market, and I think the chart is going to begin to become more parabolic as we move into 2018. So I think the chart, by the time we get into July, is going to look more like this than a continuation of this gentle and consistent move higher that we've had in 2017. I think the rally becomes more aggressive in 2018. Moving on to the energy market, as I've been saying for quite a while here, my target for this intermediate rally was this consolidation zone right around $60 to $62. We've reached the lower part of my target zone as of last week at 60. This intermediate cycle is very mature, so I don't think we have a whole lot of upside left at this point before we get an intermediate decline, something that maybe brings price back down to this 50-week moving average here at around $50. And the energy market, you can see this this moving average is just kind of flattened out, and that also goes along with my general expectation for the energy market going forward, is that we're going to be stuck in a range between $60 on the upside and maybe $40 on the downside, maybe for the next year or two, barring, of course, some kind of major conflict in the Middle East, or if the dollar really starts to spiral down out of control, then I would alter my expectations and start to expect a much more aggressive move up in the energy markets if that were to happen. But as of right now, my expectation for 2018 in energy is just more of the same. I think the energy oil market is just going to kind of bounce around in a trading range for most of 2018. This is where I think the real fireworks in 2018 is going to be. It's going to be in the currency markets. So I'm looking at the chart of the dollar here. I'm about 99% sure at this point that we've started a bear market right here. Last year, when everyone was expecting the dollar to be heading up in 2017 to reach 120, it did the exact opposite, and we have printed this was a yearly cycle low in September in the dollar, and this is all of the bounce that we could produce after a very sharp, damaging move down in the dollar into a yearly cycle low. And remember, the rallies out of yearly cycle lows tend to be the most powerful rally of the year. This was a yearly cycle low, and all it produced was a very weak rally that topped on week 7. And the rally has again moved back below the 200-week moving average. We're going to be on week 17 of this intermediate cycle next week, and if the dollar was still in a bull market, like many people would like to believe, then their price has no business whatsoever of being down here on week 17 of an intermediate cycle. If the dollar was in a bull market, price should be up above 100 on week 17, and realistically we should be back at or making all-time highs by week 17 of a new intermediate cycle. Instead, we're threatening to break down below this yearly cycle low, which is basically is a guarantee that we've started a bear market. So I've shown this megaphone topping pattern several times in previous videos. Once the dollar breaks down out of this lower support zone in this pattern, then there's really just no support at all until we get down to the 80 level or lower. So the big surprise for 2018, in my opinion, is going to be just how damaging the bear market in the dollar becomes. I'm going to predict that we're going to be at 80 or lower when we get the yearly cycle low, probably again next fall in the dollar. So I think that's where the real fireworks are going to be in 2018, is in the currency markets. And of course, if we have begun a new bear market in the dollar, then we've almost certainly started a bull market in gold. And this is what I've been saying since we got the bottom in 2015, that this was the end of the bear market, beginning of a new bull. This was the baby bull rally. After the election, we've got a very damaging move down. This damaged sentiment, damaged the technicals and the charts. It's taken a full year of basing to repair the damage that was done after the election. But this is clearly, at this point, this is clearly an intermediate cycle low, bottomed right here on the 200-week moving average. And I think this is going to, ultimately, it's going to be the end of the basing phase. I think this new intermediate cycle advance that began 3 weeks ago, I think we're going to break out of this basing phase. I think we're going above this intermediate top. I think we're going to go above the baby bull intermediate top before this is over, at least to 1400. And there's a slight chance that maybe we could make it to 1450 or 1500 during this intermediate rally. I don't believe that this intermediate rally is going to top before March or April, so we still have plenty of weeks left for this to rally. But I'm pretty sure we've completed the basing phase here. Now let me move over to the chart of the miners. Again, you can see this basing phase that we've been in for the entire period of 2017. Bottomed again for the 4th time on the 200-week moving average. We've started the advancing phase of a new intermediate cycle. I'm confident that we're going to absolutely, we're going to test this high here, and I think we're probably going to break out of this consolidation range here and probably test the baby bull high at least up here around $31 by late March or early April. And I think by the end of 2018, it will be undeniably clear that the gold has begun a new bull market, and we will, by the end of 2018, the mining stocks will be well above the baby bull highs. So there you have it. That's my predictions for 2018. More of the same in the stock market, with the strong possibility that price starts to become more aggressive and more parabolic in nature. Oil probably just stuck in a range for most of 2018. Gold, we're going to break out of the basing pattern in 2018 and begin to start the bull market in earnest, but I wouldn't look for any huge rocket shot. We're not going back up to $1,900 in 2018, but I do think we're going to make it somewhere between $1,400 and $1,500 before the end of 2018. And the big surprise in 2018 is just how much damage is done to the dollar. I think that's where the real fireworks is going to be at in 2018. And I think a bear market in the dollar is going to drive not only a parabolic phase in the stock market, it's going to drive gold out of its basing pattern. And if it does become, you start to spiral out of control, then we may break out of that sideways consolidation in oil and start to head above $60. It just depends on how extreme the move down in the dollar is next year.